prepare direct labor budget. So now we know that how much units we need to produce. So we know that unit produce for unit produce, we would be needing direct material, direct labor, and manufacturing overhead. So right now, what we are trying to do, we will be first finding out the direct material budget. So let's continue the same example. At Royal, each unit of product requires 0.05 hours, which means 3 minutes of direct labor hours. So you multiply the units of product with 0.05 hours, you will find out the direct labor hours. So you just multiply direct labor hours with the per hour rate, which is how much is that? Which is $10. It's just written here, right? But company has a policy. Company has a policy of no layoff, which means the company has a no layoff policy. So all employees will be paid for 40 hours. If somebody, he just worked for 30 hours a week, he would be paid a salary according to 40 hours, right? So for the purpose of our illustration, assume that Royal has a no layoff policy. Workers are paid at the rate of 10 hours, regardless of the hours worked. For the next 3 months, the direct labor workforce will be paid a minimum of 1,500 hours per month. So their per month salary would be based on 1,500 hours, right? So if they work 1,400, so their salary would be given according to 1,500 hours. So let's talk about that. So first of all, we know that this is our production, 2,600 to 26,000 and 46,000, 29,000, right? So direct labor hours per unit required 0.05. So it means in April, the total hours are 1,300. In May, 2,300. In June, 1,450. What they have mentioned? They have mentioned they would be paid minimum of 15. Sorry about my writing, guys. My just pen couldn't, it's not responding. Wait. Based on 1,500. So we replace it with 1,500 here and 1,500 here, right? So we replace guaranteed labor hours payments, 1,500, right? So you see here, no layoff policy. If no layoff policy wasn't there, so we would be paying according to 1,300 and 1,450. So what is the per hour labor rate? Is 10. So it means in April you need to be paying $15,000 as direct labor cost. In May you will be paying 23,000. In June you will be paying 15,000. So total quarterly payment for quarterly salaries or quarterly direct labor hours payments are $53,000. Right, guys? So what will be the total direct labor hour for the quarter? We just need to add it. So here is that. What would be the total direct labor hour cost for the quarter if the company follows the no layoff policy but pays $15 for every hour worked in excess of 1,500? So basically they are saying that if they work more than 1,500 hours, the extra hour gonna be paid you by 15. So 2,300 minus 1,500, how much is the answer? Is this is 5 8. 800 multiplied by 15 plus 1500 plus 15,000. So answer would be here 57, right? So here they would be paying total, you know, hour exceeded only 800. 800 would be given with 15. So total hours 4,500. In the quarter they work extra 800 hours. So these will be paid with 15 each, right? So their total direct labor hours going to be 57,000. So you can add different flavors to this, policies. And now prepare manufacturing overhead. So that would be our last objective. Manufacturing overhead budget. So the question says, at Royal Manufacturing Overhead, the overhead is applied to units of produce on the basis of direct labor hours. And the rate is 20 per direct labor hours. In April, they work for 1,300 labor hours. In May, they work for 23. And in June, they work for 1,450. So fixed manufacturing overhead is 50,000 per month, which includes 20,000 non-cash cost of depreciation. So depreciation is a part of manufacturing overhead. Yes or no? Answer is no. So we less the non-cash expense of which is I think 20,000, right? Yes. It means per month fixed expenses are 30,000. So you multiply the direct labor hours with the manufacturing overhead rate 20. You find out that this is the variable manufacturing overhead rate plus 30,000, which is 50 minus 20,000. Answer would be the non-cash expense answer would be 56. So you see here the total manufacturing overhead rate is 251 and number of units are 5050. It means 49.7 is per hour rate of total manufacturing overhead, right? So depreciation, we just less the depreciation here. So it means the cash disbursement of the manufacturing overhead, the total cash paid for the manufacturing overhead is 76,000. Total 191,000. Right? So if you include the effect of depreciation, your manufacturing overhead would be 251,000. And if you exclude the effect of depreciation, it would be 191,000. Right? So here we go. So we know that if you want to produce 1 unit, direct labor cost would be, direct material would be 2 because 5 pounds needed and cost is 0.40. What is the direct labor hours? 0.05 used, 0.05 hours are used and the rate of the labor hour is 10.5. And what is the manufacturing overhead we just calculated? It is 49.7 multiplied by, because it is based on direct labor hours, 0.05. So we would be finding out that our manufacturing overhead per unit is 4.99, right? So if we want to find out the finished goods inventory, ending inventory, unit produced, anything else, you just multiply it with 4.99. So what is the ending finished goods inventory here? So 5,000, if the ending inventory is 5,000, then 5,000 multiplied by 4.99, which is 24,950, right? So the main part is to calculate this 49.7, and question will mention you that whether you include the effect of depreciation or not. So normally you include the effect of depreciation to calculate the manufacturing overhead if the question is silent. Otherwise, you exclude the effect of depreciation. Right, guys? So, any question up till now? Alima, Leo.
No question.
Okay, so today what we have covered, we covered how we are going to make sales budget. We covered the production budget, and from production budget we have find out what will be the ending inventory, and from that production budget we find out the direct material budget, direct labor budget, and manufacturing overhead. So in our next class we will talk about the selling and administrative budget, cash budget, budgeted income statement, and budgeted balance sheet. And we also see that how in practice the budgeting process is applied in different industries. Any question up till now? If no question, then this is the end of our lecture. If we have some other things to discuss, we will be discussing it after this, after stopping this recording. Okay, no more question, or there is a question? Otherwise, take care of yourselves. So I'm going to be stop the recording. So there is no assignment today. We will be having assignment after the end of this chapter. Okay, stay safe. See you next time.